Good evening, everyone. Welcome to Closing Comments here on November 18th. Let's jump right into these charts and see what happened in the markets today. First up is our February live cattle. Pretty quiet day here in the cattle market. Prices just bouncing out here near the top end of the prior day's range. We did see this market pull back a little bit inside before finishing the day down there just below that bull pivot at 221. Not a whole lot of directional moves, nothing groundbreaking here today. Just a pretty quiet, balanced day here as price continues to hang out here around this 200-day moving average. Long-term support is still holding until we get offers down here below 215 and a quarter. If we do, look for the downside to continue, but in the meantime, look for the bulls to keep battling it out and try and offer more support here in the area around this long-term support line. If the bulls do get more momentum back above 221 as we go into tomorrow's session, look for them to push up here into these moving averages. First stop is going to be up here at this 20-day moving average. Look for the price to push up into here. We still have lots of overhead supply, so look for the resistance to remain up here in the high 220s to low 230s. Bears are still in control here, so we should see some selling pressure if we get up into that area. In the meantime, though, this market seems pretty comfortable here, hanging out on top of that 200-day moving average. Look for some choppy action to continue here until we can either get a break back down here below 215 or more of a relief rally up here into these averages where we could see those sellers start to get aggressive again. In the meantime, look for this market to just stay pretty choppy here where it's at. Next up, January feeders also seeing a pretty quiet day. Only about a $4.25 range here at the top end of yesterday's range. Price finishing unchanged today. Not a whole lot of excitement here, just a little bit of back and forth action as price is hanging out near the top end of that prior day's range. Once again, this market seems to be showing good support here at this 200-day moving average. We expect to see this market just remain pretty quiet and choppy here as it's trying to find more support at the long-term support line. If the bears are able to flush back down here below that prior week's low at 310, that downside should continue, but until we get closed down here below 310 or offers below there, look for this market to continue to find support here at the long-term support line. Bulls still are up here above our bull pivot for the week, so they still have a chance at more of a relief rally here. If they do get some bids rolling here early tomorrow, look for this thing to push back up here into these moving averages, try and retest this prior week's high and these declining moving averages. Lots of resistance overhead still, so look for the sellers to start getting aggressive here if we do push back up into the mid 330s up to 340. We should see the sellers start to get aggressive up there and try and push this market back down. But in the meantime here, we're trading in the middle of this make-believe range here between 310 and 340, so not a whole lot to be expected here while the market is in the middle of this resistance and this breakdown line. Look for some choppy action here or a slow drift back up here into the overhead supply zone where we should see the sellers start to get more aggressive. In the meantime, look for this choppy action or a bit of a relief rally to continue. Next up, December corn futures, pretty quiet, choppy day here as well. Price briefly poking above that 437 pivot, but still seeing some resistance at the top end of this 10-cent range at the moment until we can get confirmation close above here and get this market rolling higher. This thing should just continue to be choppy here as this 427 to 437 area has been pretty sticky and comfortable for these corn prices. Look for the choppy action to continue. Crude oil futures with a little bit of upside here today. Prices rallying back above that prior day's high, finishing the day just shy of that 50-day moving average. At the moment, we still continue to see some choppy action here around the $60 price point. We expect to see that action continue. Over the last couple of weeks, we have had the slow bleed lower, and each time we poke up here towards that 50-day average, we do see the bears start to kick in and get a little bit of a flush like we've seen the last couple times we've been here, dating back to the end of October throughout the early to mid part of November here as well. We'll see if this visit here to the 50 today is going to be any different. At the moment, looking like we're seeing a little bit of sell-off here in the evening session. We'd like to see the bears continue pushing down here and put some pressure on that 59.5 mark. Look for a slow bleed lower to continue as this oil market doesn't have a whole lot to get excited about. Very low volatility, so not a whole lot of directional moves to be expected, but either a choppy action here around $60 or a slow drift down here into the mid-50s is expected to continue. And our equity markets continuing to suffer some losses here today. We did see an early flush lower, good back and forth action throughout the middle part of the day before finishing down there below this bear pivot at 66.55. Today's week finish here has the Bears in control at the moment. This market still remains in a big picture uptrend, but this thing looks like it's starting to roll over, and we're starting to see some of the mega cap names that make up a big portion of these indexes starting to roll over. At the moment, the market's just kind of waiting on NVIDIA earnings, which will be released tomorrow after the bell. That's going to be a big one, whether or not this market's going to be able to keep this rally going, or if we're going to see more of a corrective move here over the near term. At the moment, with the close on these indexes today the way they did, looking like the downside is going to be the easiest leg out from here. So look for the market to continue pulling back. Encourage everyone to raise some cash, get defensive here while we are going to be moving into a little bit more of a corrective environment here for the short term. Nothing major expected, but a good 8 to 10% correction would be more than welcome in this market after we've seen this impressive rally over the last 8 months here. 40% gain off of the lows all the way to these new all-time highs, so a little bit of a corrective move here would be healthy for this market, and looking like we're starting to see that downside continue. Like I said, though, it's going to be very dependent on tomorrow's action and how those NVIDIA earnings, how the market reacts to those NVIDIA earnings. So keep an eye on that going forward. Not a bad time to be defensive and raise a little cash here. This has been a very impressive run throughout the summer and fall here. This market should see a little bit deeper of a pullback here into corrective territory, so just encourage everyone to remain cautious until we can get a little bit better picture based on those earnings and see how some of these mega cap names react in this area. But in the meantime, looking like the downside is the easiest way here. We've got lower highs and lower lows happening over the last couple of weeks, so look for the bears to keep on pushing lower and shave a few percent off of this market here over the next few days to few weeks. That's all we got for this evening. Thank you everyone for tuning in. We'll catch you guys tomorrow night.